Hello everyone, how is everyone doing today? Alright, so today I've separated three topics based on my analysis and based on the chat we had yesterday as well, because not too sure if everyone that is here was yesterday on yesterday's webinar, but a lot of trades has been captured with really great setups. I think all of them are in profits today, so literally all of them are running in profits. And today I'm going to stop quite a while to drink water because my throat is literally gone. I think I'm going to get sick pretty soon. When it starts like that, I already know. So we're going to talk about the dollar summer bounce. So basically, we're having a little bit of a increased, a little bit of a bounce, if you wish to say, on US dollar index. Lots of people are thinking that this is it. You know, it's time to start to long the US dollar. You know, is that just a temporary relief, or is just an actual trend reversal? Shall we long US dollar and go with it, or should we wait and continue to short it because that's a better opportunity? What should we do? You know, so that's the main point that we're going to be looking today. Second, central bank strategy. So the Fed's data-driven approach versus the Bank of Japan policy dilemma. You know, the Fed's been very data-driven, and what Jerome Powell has said in a couple of days ago about if there wasn't the tariffs, we would be cut already more. And maybe they would have cut already 75 basis points in the first half of the year, but they only did 50. Okay, so lots of things about that that are driving the US dollar down as well. And last but not least, I think the best trading setup about this is the US dollar yen. Okay, so I got some strategies amid the whole geopolitical and economic uncertainties that I'm going to share with everyone. But that's about it for today. There you go. Cool. Let me just take this out. Perfect. So the first thing is the dollar bounce. Okay, so oops, sorry. So the US dollar index had a bounce, right? 0.75%. It's not even a percentage. It's not even 1%. Okay, so why everyone keeps thinking that literally this move here is a completely reversal of the trend? Okay. To be honest with everyone, if you want to look at even in technical perspective, you know, you should be looking to reversals only above the area of 97,500. Okay, you shouldn't be looking to oh yeah, the US dollar is going to reverse and is going to go for the uptrend right now. No, I wouldn't trust on this small move of not even a percentage, okay, not even 1%. It's literally less than 0.9%, right? So it's 0.81%. So really interesting how people keep thinking about that the US dollar will come back. And I've been telling every single one of that I know that the US dollar is gone. Right. If you look at euro to USD, look at what happened. So 1 euro buys 1.18 US dollars. Right. So it's insane. It was literally 1-to-1 6 months ago, and now it's 1-to-18. All right. So it's a huge difference. It keeps even worse. If you want to send money, it's like 85 euros. Oh my God, it doesn't even buy 1 euro. So the US dollar for me is gone. Okay, and we can look at the chart since beginning of this year. Let me take this off. if you look like on a daily wise, since beginning of 2025, we've been hugely down. Okay, like right here. There you go. So we started the year at 108, 526, and now we're down more than 10%. So nearly 11% down on this whole move. And it's a big move. Don't get me wrong. And if you look, lots of things have been happening, over and over. But the major driver of this move has been the Fed. Okay, has been especially the first after June. So after here, May and June. There you go. So after this candle, it just increased even more. And the reason is because last month we had Jerome Powell stating that they would be looking to cut 75 base points for this second half of the year, starting at September. We don't forget, guys, we do have the NFP today. Okay. So if the NFP continues to come into lower, so it's expected to come at 120,000 from the previous of 139,000. The average hourly earnings is expected to drop, all right, to 3%, sorry, to 0.3 if I'm not wrong, and the unemployment rate is expected to rise at 4.3% from previous of 4.2%. So I'm just drinking some water, sorry. All right, back. So when we have such a deflationary economy like that, where it doesn't even have people to work, there's literally less addition of jobs than the last month. We're talking about something that the inflation will keep going down, okay? Because there's less people spending money, and they, even the people that have work, even the people that can get and work, they have less money to spend because they're getting paid less. Okay, so the average hourly earnings is expected to decrease as well, and for that reason, what we can look at it is a continuation of this bearish trend down. All right, this bearish trend on the DXY. Maybe we're talking about 95, 94. If we look an average, all right, for the first and the second quarter, so from January to March, so January, February, March, end of March, right here. All right, so and then this one goes over here. So we had an average of around 3.83, and then the second one was second quarter was 7.21. So if we do 7.21 plus 3.83 equals to 11% down, divided by 2, that gives an average of 5.52%. So, looking fundamentally wise, that's a really, I'm not going to say that this is going to work 100%, but looking at a very fundamental wise, we expect this to continue, okay? Because the sentiment of the market still to be risk on. As I always say, risk off is when the US dollar gets the better, okay? Is when the market is not willing to have risk on the wallet. It's not willing to have riskier assets, and they're looking to inflow into US dollars, so USA pretty much. And then we have the USD on risk on very bearish. And that's exactly what I think it will continue to be in the next 3 months. So basically in the next quarter 3. If we look to an average of 5%, we're talking about low as 93. Okay, so let me just put it 93 here. So we can talk about the the third quarter finishing in September. Where is it? Okay, there you go. So started at July right here. July, August, September, finish at September. There you go. And here. So pretty much all of this is space. What I think it can happen is a continuation down to 93. Okay. Unless in the next couple days or couple weeks, we have a break above 97,500 or even 98. Okay. Oops, sorry. 4 hours, not 4 minutes. So it's a very simple way, okay, to take this bullish move here. It's just a correction. Right? Chill down, relax. Continuation of US dollar, Japanese yen probably down, euro dollar up, and then pound dollar up as well. All of those trades that we've discussed it yesterday haven't changed the thing, haven't changed the thing, okay? Actually, let's have a look on euro dollar. So euro dollar is in profit for those who entered at the beginning of the zone, the support zone, and for those who waited until, like me, to get into the mid of the support, was still out. Okay, so that trades if we go above this area of 1.718,300, it gets pretty much invalidated, okay, because it's already broken, and then we would look to see another retracement on this area to re-enter the longs to go to 1.20. Okay, now the other trade we had was the pound dollar. This trade was really great, so we got in, tapped in for the first trade, got stopped out, as they say. So it's less 1% into the wallet. Let me just take these lines off. There's too many lines here. It's making confusions. This one as well. Cool. So simple as that, right? We don't need many things on the chart. We literally don't need any things on the chart, because what we're looking is we're looking for the fundamental to drive the way. And that's a good trade. I potentially believe, to be honest with everyone, that we're going to get stopped out on this one, because it's losing the strength. If we don't see a break above this area of 136,670 before the NFP, most likely the trend will reverse and get stopped out. Just being honest, that's what I think, because the talks from UK has been pretty bearish in the last couple of hours and the last couple of days. So that whole move down, yes, strengthening of the US dollar, nothing to do with the pound. But if we continue to see this move fading and being very no momentum implying to it, like something like this, we will most likely see a reverse. Okay, if we break this bottom here. Now, Aussie dollar long as well, we had yesterday, it tapped it into the area. Okay, for those who were waiting for the 50%, same as me, it didn't got in. The direction was 100% correct, but just the trade didn't got triggered. US dollar Japanese yen was the one that got triggered and is running. Oh no, I've took it off. Sorry guys, took it off because I was doing another analysis and I had to use that. But if I'm not wrong, was somewhere around here. Stop losses above these highs and take profit down here. 122. Perfect. So yeah, it's literally on the entry point. It doesn't matter where you were, but somewhere around this area. So we're still waiting for pushback. Most likely, as I say, we're very, very exposed to the US dollar weakness. All right, so we have pretty much everything, like pound against US dollar, euro against US dollar, US dollar against yen, and then we have Aussie against US dollar. So all of the currencies we trade is against the US dollar, and we're trading bearish on the US dollar. So the portfolio is very tilted to negative US dollar. So anything that comes positive, most likely all the positions will get ripped off. So managing the risk before the NFP hits is crucial. So, for instance, like the pound dollar. For instance, like the pound dollar, I would recommend, if you are into this trade, maybe close half of the trade, or even more, 60 to 70%. Put your stop losses into break even. If the trades come back and stop you out, that's all right. Right, that's okay, because first of all, it's in break even. We know that the direction of the US dollar is continuing to go down. Therefore, we can even wait. If the market comes and stops us out into break even, that's completely fine. We can catch a better entry somewhere around these lows for a continuation up. Okay, so don't get stressed. It's all good. Another one would be the AUD USD. If you are actually into this trade, I'm not. So because I was waiting a little bit more, but it's okay. How many pips was that? It's literally like less than 10 pips, most likely. Yeah, 5 pips. It was 55 points, so 5 pips. That was very, very minimal. But anyways, yeah. If you still have this position on limit, like pending order, just delete it, because I think it's passed on already the opportunity to carry this trade. And for the euro dollar, I guess it's my favorite trade. Just keep holding that if you got it here, and if we break above the 118,300, that's very, very good, and you catch it a good trend, a good momentum trend possibly. Otherwise, if you're not, just cancel the pending order as well. So just reviewing these trades, okay? So the answer for the dollar summer bounce, temporary relief or trend reverse is basically a temporary relief, okay, guys? So don't worry about it's gonna go above 100 again. It's gonna it's gonna skyrocket this and that. No, I really don't think so. So my opinion is it's just a temporary relief. Central bank strategies, the Fed data-driven approach versus the Bank of Japan policy dilemma. Why did I brought this up? Let's have a look at the CME again for the third time to this week. So I want you guys to pay attention into this July. Okay, what I think it can happen is look at the yields. Right? So the 10-year yields and the 2-year yields. So the 10-year yields are massively down the last couple of weeks. Okay. So we came from all the way up to 4.62, down now to 4.26. So that's like 8% down. Right. It's a big move. It's a big move. It has been lower, like 3.8 in April. But we're not into this market scenario at the moment. What we are looking for, if we continue to see these yields drop, even the 10-year or the 2-year, it doesn't matter much. I just want to see the yields continue to drop. Okay, essentially they follow the same path, but it's just a different volatile. If it's one is a bit more riskier, the other one takes more time to go, but in a sense, it's the same thing. Now, if we continue to see this going down, what we probably will see is so there's 3 things. The first thing is if we continue to see the 2 years or the 10 years bonds continue to go down, plus a lower NFP, plus the CME Fed Watch tool changing the July, I'm talking about July, not September, October, or December, July, change from 74 to, let's say, 60, or even below 50% to here and above 40 to 45% here, this is going to be really, really, really bearish for the Fed. All right, it's going to be a very, very bearish rhetoric. So expect on the 30th of July this month expect on the 30th of this month, 30th of July, that we may have hints about a potential cut discussed for today. Okay, and why do I say that? Because basically, what Jerome Powell have been saying and have been stating is that he would cut already if it wasn't because of the tariffs. Okay, so that is a huge, huge, like literally very, very big announcement. If it wasn't because of the tariffs, he would have cut already. Imagine. Now he comes into the 30th of July and says, we've thought about a cut for today, but we did not. So that just shows how bearish the US dollar will continue to be. Okay, so again, answering this question, it's a temporary relief. Answering the second question, it's the Fed, very data-driven approach. Now, going to the BOJ, the Bank of Japan policy dilemma is inflation is going up and we want to increase the rates. That's it. Okay, so it's a very simple rhetoric. So if we look at US dollar yen, like this one, we had quite a good opportunity in the last that's cool, in the last couple of days, right? I've mentioned that for everyone here. If we look at here, what we can see is basically a very consolidated market, right? We don't have much of happening around US dollar yen. Besides that, we've hit that support level, and now we're sort of trying to come back above to these areas. I would fade off those high values and just look at these ones, because these two here, this one, and this one, I just ignore them, okay? Because it was an up momentum trend and then basically was basically back again afterwards. So I continue to just believe on this sort of support and resistance area here, and it's pretty simple. What can possibly happen is we may have a push above these areas and a continuation down, a break of the support to go down. Soon as we see this move up, most likely we're going to have something about BOJ, all right, so the Bank of Japan, and we will get a rhetoric of we're going to get a bullish rhetoric about the rate, and that they're possibly thinking about hiking the rates into the first quarter of next year or something like that. Yes, I know, right? It looks far, but it's already July. So markets are already preparing to do portfolio switch and etc. for next year. Okay, so just pay very close attention to it. It's definitely important to us to understand a little bit better how can the market position themselves for the next year. It's not only about the next 2-3 months, it's about already predicting what's going to happen next year. So most likely the market will react very, very early to the stage of like, okay, so if the Bank of Japan is going to hike, I'm just going to buy yen. And technically, I would prefer a big move down to 138, just because I'm bearish on the US dollar. And I think that the risk on will continue for quite a while. And that being said, a hawkish rhetoric of Ueda, that is the chairman for the BOJ, is like the Jerome Powell for Japan. He would increasingly be more hawkish, and that would make the Japanese yen more stronger. Okay, especially against the US dollar, even the Canadian dollar, like CAD yen. There you go. Even CAD yen, we can see some continuation down. Okay, so just pay attention on those two. But yeah, it's completely different. Okay, from from Fed is one thing, and from BOG is a completely other. Okay, so that's what I want you guys to understand and try to see, in a sense, that the market is more likely to follow a bearish US dollar and a bullish Japanese yen than a bearish Japanese yen to a bullish US dollar. Someone sent a message and they say that can I wait for price to break above the resistance of 1.183 before I place a buy for euro dollar? Euro dollar, let me go there. Oh, why it's not working? There you go. So for euro dollar, my honest reaction to you would say just wait. Okay, just wait. Be patient, because we have a really big announcement coming, and it's very, very important for from what we've been seeing already into the market. So sometimes not jumping straight away into a trade just because of the FOMO, like the fear of missing out, is a good thing as well. So control your emotions and just relax for a second. See how the release will be, and then you can take your decision. But if your strategy says I will enter long after 1.18300, then it's your strategy. Everyone has a different risk appetite. Everyone has a different strategy. So if your strategy is proven track record, go for it. In my case, in my scenario, I would just wait, because the market will be here tomorrow, and the market will be here next week, and the market will be here next Monday, and the market will be here next month, next year, next 10 years, next 20, next 100, next 1 billion years. It's going to be here. So there's plenty of fish into the sea. We just need to wait and catch the right one. So that's how I approach trade. I try to take less trades, but with more high win ratio, so I can trade less, pay less commissions, pay less swaps, and just be more profitable in a sense. Okay, so I hope I've answered your question. Let me just drink some water, guys. All right, cool. So the next one, and the last one for today, is US dollar yen. So the strategies that I have to trade, I actually thought about this already, but anyways, just gonna go over again so you guys can have a look at it again. So my whole point of US dollar yen is I do believe we can see a push up around these areas of 144,500. There's pros and cons. Okay, if you are into a trade, you may get stopped out if your stop losses are above this high, or you can just let it run and add some positions, into it, if that's how your risk management approach is. My take into my portfolio is that what I would do is actually I would close the position that I had on US dollar yen because it's floating on break even. Wait for a move above these highs of 144,200 to 144,500, and try to enter a short into this area. Okay. Place your stop losses above this high, and then make this trade down to 138, because I don't believe that we're going to get any other chance for this trade to go above these areas. Okay, for those who caught trades at around here or here, like 148, man, that's fantastic. Right? Keep holding those shorts to 138, and you probably will thank me later. But if your risk position says for you to close, follows. All right, I'm not giving you any personal advice here. It's just up to you. But if I were having to those trades, definitely I would hold to 138, right? More into like a swing trade position, close like 60 to 70% of the trade and let it run for the rest of the month to see how that goes. But long story short, waiting for the market to pull back again above this area and a continuation down, break of this support here, and then maybe targeting at 138. Okay, cool. That's my strategy for the US dollar yen. Why did the market get quiet on Iran? Is there something? No, it finished pretty much. So there's nothing else to be done in there as they had the agreement. So that sort of volatility fades out in a sense. So if there is anything happening, that would be massive. But at the moment, just very minimal. Right? So very, very minimal. We don't have much of happening. What else? Have you reviewed GBP Japanese yen? No. The 9th of July is the end of deadline for tariffs, right? Correct. Is Trump going to add or change tariffs on July 9th, and how might that affect the market? Do you think what happened in the first quarter could happen again this quarter? After Iran left GPS. What do you mean GPS? Okay. If I think that what happened in the first quarter could happen again this quarter, look, Zod, what anything can happen. Literally anything, things that we'd not even expect can happen. Okay. And now that being said, the second point is we need to think more strategically in a sense for that, because we can't be just, oh yeah, may do, may not. From what we know, what he was doing is completely unlawful. Okay, he knows that because he stopped. Right? So, and then he put that deadline until 9th of July. I don't believe that someone that knows that what they were doing were wrong and they've been alerted, they would continue to do that. Even there is a lot of money in the line. Okay. What he's now trying to do is take Jerome Powell out from the central bank and replace with someone else. I think that's where the market is more pay attention to at the moment. So I'm not saying that couldn't happen, but I'm not looking for this to happen. Okay. And just, GBP Japanese yen, I wouldn't be looking to trade that because it's two strong currencies. You guys need to learn that you don't trade two strong currencies. Okay. You don't trade like the pound. We're already trading long. So long pound US dollar, because the pound is a stronger, US dollar is weak. And then we short US dollar against the Japanese yen because Japanese yen is strong. So we have a pound strong, yen strong, both together. There's no real sense to trade. Okay, so not looking much into the Japanese GBP Japanese yen. Cool. I think I've answered everyone's question. That was quite a good week. Hopefully everyone could learn a few things here and there. Don't forget that today is the NFP, and as I mentioned, if there is any bit of soft data less than expected, like the NFP is expected to be 120,000, if there is like 110,000, that would be massively bearish. Okay, anything below those expectations are very bearish, and I mean really, really bearish. So trade momentum like shorts longs euro dollar, longs pound dollar, shorts Aussie, shorts US dollar yen, longs Australian dollar against US dollars, and that kind of trade is really great. Place your stop losses to break even, close partial, go with the flow, try to make it swing trade, and I think everyone should be good. I think today we'll give a more clear view Yes, but you know, it's a very data dependent market, so we need to wait data to data. That's pretty much it. Cool. All right, everyone. Thank you so much. Have a great weekend. Don't forget to, you know, study, review your trades, and we'll be back tomorrow with normal YouTube videos. Or I see you back next week for more webinars. See you guys. Have a great day. Bye bye.